Good morning. Yeah, there's some better than expected readings, and certainly much better than one would have been expecting a few months ago. To close the year with the Eurozone PMI at a 5-month high is quite something, really. Yes, we're still in contraction, but the rate of decline indicates only about 0.1% GDP decline on a quarter-quarter basis. So this is a very mild downturn at present, and what we've seen really as the months proceeded is a continuation of the improving trend, which stems really from this sort of easing inflation environment that we've got at the moment. It looks like fears of soaring inflation and a big energy crunch that really peaked back in October. And since then, those fears have alleviated somewhat, helped, of course, by subsidies and the overall sort of European gas price situation starting to improve. So that's really feeding through to better business confidence now, I think.
Interesting, especially because yesterday we got those German inflation numbers, which surprised to the downside, driving a rally in markets. Now this morning, the French inflation numbers also coming in a little bit softer than many had expected. How is demand holding up? You talk about business confidence and it being resilient in the face of easing inflationary pressures. What about consumers? How is demand?
Well, it's weakened. Certainly, we're in. You talk about stagflation. We're in the stagnating bit really at the moment, where high prices have really eaten into purchasing power and spending by both businesses and consumers. That's certainly nothing like what we were seeing earlier in the year. But a flip side of that is that the supply constraints, that big rush of demand that led to lots of supply chain shortages, that's just disappeared now. If you look at the supply delivery times across the Eurozone, they're unchanged in December. So this is the first time since the pandemic that you've not had companies reporting that deliveries are getting longer. So this is leading to a structural shift really in pricing power away from the seller towards the buyer. So this is the key to everything, really. This is changing that whole inflationary environment, because that weakening demand combined with an improving supply situation is really taking the heat out of inflation. It's very evident in manufacturing now, where costs are rising at the slowest rate for 2 years. Much stickier in the service sector. We can see here the input cost index is about 10 points higher than in manufacturing. But the important thing here is that service sector inflation tends to lag manufacturing by about 9 months. So this big fall that we've got in price pressures in manufacturing is going to feed through to the service sector in coming months to help bring inflation down even further.
So interesting what you're saying, especially about goods inflation and the linkages to supply chains. I just wonder, because we spent a lot of time in the last couple of weeks talking about the potential for a China reopening, the impact that is going to have on global supply chains. What is sentiment like as far as businesses are concerned vis-a-vis these potential supply chain bottlenecks easing even further should China fully reopen?
Yeah, well, this is one of the things that helped push business confidence up further. So we talk about the sort of difference between the flash and the final numbers. One thing that we saw with those final numbers is a greater reaction to what's happening in mainland China in terms of the loosening of COVID restrictions and helping boost confidence about the year ahead, that supply is just only going to start improving further as China lifts itself out of the sort of the depths of the COVID pandemic that it's been going through in 2022. 2023 is going to look a lot different. There is a concern, though, that if China's recovery does lift off, what that's going to do to prices, as many commodity prices will inevitably start to rise as China's economy steps up a gear. So there's a downside to that growth, but on the whole, it's lifting business confidence. I think that supply is only going to get better in 2023. So this crunch that we've been gone through for 18 months, 2 years, is really behind us now.